Hey folks! Today we're diving into some very important updates regarding NIO as the company approaches its second quarter earnings announcement. The market has been watching closely, and the anticipation is building because these results are expected to mark a turning point for the company. From delivery numbers to financial performance, from competitive positioning to new product launches, there are many moving parts that make this particular earnings report especially significant. In this video, we're going to break down everything investors and followers of NIO need to know, what the latest signals are telling us, how comparisons with peers like Xpeng are shaping expectations, and why September 2nd could be a pivotal day for NIO's stock and its broader growth story. This is not financial advice. Please do your own research. NIO's stock recently closed at $5.07, which represented a gain of about 4.1% in just one day. This kind of move naturally captured the attention of investors, and much of this optimism can be linked to the strong second quarter results reported by Xpeng. Their numbers came in better than many expected, and this immediately raised hopes that NIO could deliver something similar when it announces its own Q2 earnings. The official date is already set September 2nd, before market hours, and that timing has everyone watching carefully. Why does this quarter matter so much? If we look back, the story becomes clear. In Q4 of last year, NIO achieved record deliveries but still posted a staggering net loss of nearly $1 billion. That same trend continued into Q1, again with losses hovering around the billion-dollar mark. Understandably, investors were frustrated because high delivery volumes weren't translating into financial improvement. However, NIO's leadership, including its CEO, has been consistent in saying that Q2 would mark the start of meaningful changes. This is why so much attention is being placed on this earnings call, because it's not just about the numbers for the past 3 months, but also about whether the company can begin to demonstrate that the worst of the financial strain is behind them. Xpeng's Q2 numbers added fuel to this optimism. They reported gross margins exceeding 17%, with vehicle margins around 14%. Much of their margin strength came not only from vehicle sales but also from other revenue streams such as selling parts and components. This lifted overall profitability and gave investors a reason to believe that NIO could also start showing improvements. Now, while it may be ambitious to expect NIO to hit the same level of gross margins as Xpeng right away, what really matters is whether the trend is moving in the right direction. Even moderate improvements in gross and vehicle margins could be enough to shift investor sentiment. Another key factor is NIO's August deliveries. Just one day before earnings are released, the company is set to report delivery numbers for the month of August, and all indications suggest that it will set a new all-time high. If that happens, it will provide immediate momentum for the stock heading into September 2nd. A strong August report could push share prices higher even before the earnings call takes place. And then, on earnings day, NIO will not only reveal its financial results for Q2, but also provide forward-looking guidance for Q3. This guidance will be critical because it gives investors insight into what kind of production and revenue numbers NIO expects to achieve in the coming months. For context, Xpeng recently gave guidance of roughly 113,000 vehicles for Q3. Of course, NIO and Xpeng serve different segments of the market. Xpeng caters more to mass market buyers, while NIO positions itself as a premium brand. NIO also has its sub-brands, Onvo, which focuses on family-oriented vehicles, and Firefly, which targets a more affordable premium niche. This multi-brand approach allows NIO to cover different customer groups across income levels in China. Upper, middle, and high-income buyers are more likely to stick with NIO's core premium brand, while Onvo and Firefly appeal to middle-income consumers who still want advanced EVs but at a more accessible price point. When it comes to the actual numbers investors will be watching in Q2 earnings, 3 stand out. First, net losses. In both Q4 and Q1, these were around $1 billion, and analysts now expect that figure to come down sharply. Some forecasts suggest it could drop to around $600 million. That kind of improvement would signal that the company is taking meaningful steps toward financial stability. Second, earnings per share will be closely tracked. As losses narrow, EPS moves closer to break-even, which is a necessary milestone on the path to profitability. Third, forward guidance will be vital, not just in terms of expected deliveries, but also revenue projections. If NIO can confidently project at least 100K deliveries for Q3, it could restore a lot of investor confidence. Of course, financial metrics only tell part of the story. NIO's vehicle lineup and new technology also play a big role in shaping expectations. During Q2, the company benefited from new models such as the ES6, the EC6, and the ET5T. The ET5 sedan in particular has been gaining attention, and what makes these vehicles especially significant is that they are equipped with NIO's own in-house developed autonomous driving chip. By designing this chip themselves, NIO has greater control over costs and performance, which can directly contribute to stronger gross margins. This is a major development, and since these vehicles began hitting the market as early as May, their impact should start showing up in Q2 and beyond. Looking further ahead, the ET9 is also worth mentioning. As NIO's flagship executive sedan, it represents the brand's ambition to remain at the forefront of premium EV innovation. While it may not yet contribute significantly to delivery numbers, its positioning and technology showcase the kind of brand strength that helps NIO differentiate itself from other players in the industry. All of these factors, financial metrics, delivery growth, gross margin improvements, and product strategy combine to make Q2 earnings a decisive moment for NIO. Investors want to see that the company is not only capable of scaling deliveries, but also of turning those deliveries into sustainable financial performance. So, to wrap it all up, NIO's upcoming Q2 earnings on September 2nd will be closely watched for several reasons. The company has faced heavy losses in recent quarters despite record deliveries, but management has promised that Q2 will show a turning point. With Xpeng's strong results setting a positive tone, expectations are that NIO will also show progress, particularly in reducing net losses, improving gross margins, and providing strong delivery guidance for Q3. Add to that the likelihood of record-breaking August deliveries, and the stage is set for a potentially very positive market reaction. For investors, the key questions are: how much progress will NIO show in narrowing its nearly billion-dollar quarterly losses? How close is it to reaching profitability? And how strong is its guidance for the next quarter? If NIO can deliver on these fronts, then September could mark the beginning of a much-needed turnaround. All eyes are on the company now, and the next few days will be critical in shaping both its short-term stock movement and its longer-term growth story. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.